I'm putting my neck out here. I'm planting my flag, claiming that China stocks will explode in 2023, on top of the monstrous rally we have just experienced since last October. So by exploding, I mean explode to the upside, of course, and not explode out of existence. Don't misunderstand. So I'll lay out all my arguments in this video, and you can check back in a year's time. So since I'm already running the risk of looking dumb in hindsight, so I think asking you to gently hit the like button wouldn't be a tall order, would it? I'm making this video after the recent pullback in valuations and the entire balloon gate incident where China was essentially sending a spy balloon to the US, which exacerbated the already strained Sino-US relationship. But I still remain relatively bullish on Chinese stocks as a whole. If not, I would have already exited long ago. So looking at the Hang Seng Index, we have had a great run from the lows of 15,000 points near the end of October 2022 to the highs of 22,700 points at the end of January 2023. So that's a 51% run up in 3 months on an index. Bitcoin wasn't even this volatile. That said, it does seem like Chinese investors were net sellers of around 1.6 billion Hong Kong dollars worth of Hong Kong listed stocks last Thursday, and they've sold every other day since returning from the Lunar New Year holiday, taking the cumulative pullback to be around 10 billion Hong Kong dollars. And if you to convert it, that's around 1.27 billion US dollars. So to put things into context, this Hang Seng Index rally from 15,000 to 22,000 points actually lifted the market cap by more than 1.5 trillion US dollars. So does the selling from the Chinese investors actually suggest that mainland investors are currently losing confidence? I don't think so. So I would think that it's closer to traders trying to take profits after this monstrous run. Now, let me lay out my version of a story of why I think Chinese companies will explode in 2023. Firstly, the Chinese households are rich AF. Chinese households' banks deposits actually surged by 18 trillion renminbi last year, 8 trillion more than 2021, and that's about 36,000 per family. So money was saved from less consumption, fewer home purchases, and less financial investments over the last 2 years. So the households here have been flushed with cash due to the months of lockdowns and have nowhere to spend their money. And this in turn, in my humble opinion, unleash this pent-up demand, which could mark the start of a strong retail recovery. Of course, I would concede to the fact that a large sum of this amount would flow out to revenge travelling as well. So if we were to do a vanilla comparison between the general Chinese public with their US counterparts, I think we don't need much explanation. The graph speaks for itself. At least on a superficial level, the Chinese have an extremely strong cash buffer to withstand any upcoming crisis, especially when it pertains tapping onto the household savings. However, I would also like to point out that the Chinese are generally better savers compared to the American counterparts. And it's the government's job now to convince people to consume, even though it hasn't been really successful for quite some time now. So personally, I'm still expecting a strong consumption recovery in China, but they probably won't just blow all their savings overnight. Let's not forget, it's the Chinese people we are talking about. Similarly, many earnings forecasts for Chinese companies are also expected to rise by double digits in 2023. These are street estimates. So my baseline assumption going into 2023 would be an easy beat in Wall Street estimates for most companies that I own in my portfolio. So for many of you who would immediately jump on me saying that whatever I'm saying today is hindsight bias because that's what the banks are reporting, I'll just post a screenshot of my message in the Discord chat back in November where I made similar observations before companies like Jefferies, Goldman, Bloomberg actually started backing China. And don't forget, the China's COVID policy only loosened in December. So a reopening was an eventual outcome. I just don't know when. So I just continue to accumulate on the lows. On top of just household deposits, we can try to triangulate more data points to get a much clearer picture on how the consumption patterns are in China today. So 1. Consumer spending on Ant Group's Alipay has more than doubled at tourist destinations from a year ago. Searches from hotel bookings has also surged 600%, and hotel spending on the platform actually jumped by 80%. So travelling in China is recovering with around 44 million trips taken on Jan the 26th. And even though it has yet to caught up with 2019 figures, we are definitely looking at a strong uptrend. and China's box office totals through the first 6 days of the holiday tops 2022. Furthermore, Chinese firms actually lead equity financing as 2023 starts, where funds raised by Chinese firms exceed those by their US and European peers combined. So this might be a rather skewed data point, as we know that in general, the current US and Europe market is experiencing some sort of a slowdown, coming out of the Fed tightening cycle. But China is evidently insulated from this hiking regime. So in fact, China's mega banks are currently trying to hand out loans to troubled developers to see through the construction of existing projects, and the government in general is looking towards adopting more pro-growth policies to support enterprises to make up for the last 2 years of lost growth. So more importantly, after this normalization phase out of the haphazard lockdowns, investors are probably expecting a huge uptick in activities, and it's evident with the PMI numbers, where activities in China's services industry actually expanded, suggesting more travel and spending during the holiday season. That said, China's incredibly volatile PMI actually shows the start-stop confusion of the COVID-0 era, and thank God we're out of it, and we are probably much closer to put a full stop to the end of that chapter. All things said, everything that I've discussed remains as a story and forecast by analysts on the sidelines, including myself. So only time will tell, as more data is being released out into 2023. So the critical bottleneck still remains on the same factor. It lies on whether the government is able to encourage their people to go out and start spending money so that they can kickstart this monstrous engine of growth again. Considering that the rest of the world is starting to slow down and recessionary pressures slowly kicks in, so the reliance on exporting out to the rest of the world is expected to scale down precipitously. So throughout this process, have you noticed something? Just over the course of a few months, the narrative just flipped on itself. Still remember watching videos like these on YouTube, where YouTubers and even TikTokers were jumping on the bandwagon, claiming that this was the end of the Chinese economy. Evergrande's collapse was worse than Lehman Brothers. China has lost her way, as a former Chinese leader was being manhandled out of the Congress. Chairman Xi consolidated power, and gone are the days of China's prosperity. So most of these headlines are from your traditional media companies, and analysts from bulge bracket banks were also echoing similar sentiments. Today, it seems like China is the next biggest recovery story. All I can say is this: nobody here is looking out for your interests, including myself. We are all self-interested individuals peddling our own narrative, and this is just storytelling at best. So you take in the data, form your own narrative, and invest accordingly. So from time to time, you can take into account other people's opinion, but it should still be your decision at the end of the day. Make the decision, learn from what you did right or what you did wrong, refine the process, and come back again stronger. Inevitably, there'll be a lot of noise along the way. Heck, there will also be a lot of good storytellers out there that will entice you to believe in their worldview. So I don't think that there's anything inherently wrong to listen to others, but just be ready to handle the consequences as well. So with that, I'll see you in the next video, but more importantly, I will finally see you on the moon. Goodbye!